Good morning, ladies and gentlemen. My name is Greg Mikulowski from ForexLive.com. This is the morning Forex report. Today's date is October 12th, 2022. We just saw a PPI come out. Bit stronger than expected on the headline number, 0.4% versus 0.2% expected. The year-on-year went to 8.5% from 8.4%. In the ex-food and energy, it came in at 0.3%. That was as expected. The year-on-year was a touch lower at 7.2% versus 7.3%. So let's get into the price action. We're seeing the dollar move a little bit to the upside after the report. U.S. stocks are trading back toward the unchanged level as I speak. So let's take a look at the technicals. We'll start off with the euro versus U.S. dollar. Looking at the euro versus U.S. dollar, what we see off of this chart is two levels in play. One is this swing area on the downside where we have different swing lows and swing highs through here. The market came down to that level on Monday's trade, found support, and then on Tuesday we came down into that level and bounced higher. And today we also finding support near the high of that range at 0.96836. This 0.9662 level has a dual importance. Why? Because if you go back to the weekly chart and look all the way back to 2002, this period between June and October, the low of this range through here came in at 0.9662. So that is a key level on the downside that if the price is going to go down, we're going to need to get to and through that level, and then we'd be into the extreme area of here. These are our low prices from 2022, and that's the extreme. That's where the buyers ultimately came in and pushed the price back to the upside. The first target below that 62 level will be at 96.35. And that's what we'll be looking for, get below that level when we start to think in terms of the lows for the year. Now, the other level is of importance is on the top side, and that level comes in at the 100-hour moving average. Note that the move to the upside yesterday saw the price move right up to the 100-hour moving average, followed sellers right against that level, and the price pushed down. We did see a rebound in the early London session that took the price within sniffing distance of the 100-hour moving average. But ultimately, if the price is going to go higher, this clue right here and getting above the 100-hour moving average and staying above would be the requirement for the buyers to start to take more control. And then we start to look toward the 200-hour moving average. So the 100-hour moving average currently comes in at 0.97418. Get above that level and stay above that level is needed to give the buyers more comfort. The dollar versus yen, you can see moved above the 145.90 level in the early Asian trading as traders and fund flows moved into the dollar and out of the yen. That's the fundamental view. But we saw here back in September how the Bank of Japan came in, thought that this was overdue speculation, and started to move to the downside. We just had comments from Kuroda come out saying similar, saying things that, if we get increasingly speculative because the dollar versus yen starts to move higher at a faster pace like it was doing through here, then be careful. And so he's set the warning out, but he hasn't stopped the move to the upside so far. We see the dollar versus yen trading 146.76. We have a topside trend line technically coming in play, let's see, around the 146.87-ish type level, just below the 147 level. I would expect that traders might look to lean against that level on a test, just to be cautious about speculative moves and too fast moves. So be aware of that level with a stop above that level if you were to lean against that area. So be aware, be prepared, but the dollar versus yen is moving higher here and away from the 145.90 level. Note also that how the price did hold support ahead of that level here at 145.98, which was another indication of the momentum to the upside for this currency pair. Let's take a look at the sterling versus US dollar. There are, Bailey's comments late yesterday that, get the bond buying is going to be over by Friday. Sent the pound sharply to the downside. Where did we go? We went right down to the 50% target. This is a target that I was outlining yesterday in my videos, also in my posts. You can go to forexlive.com and take a look at those. but the 50% retracement of this move from this low to this high right here. 50% came in at 1.09242, and our low price in trading today came in at 1.0932, which was just above that level. Actually, the low was 1.0922. So just below the 24 level, and there are other swing levels in here that I outlined here down to 109.17. So don't call me a liar. The price came down to our support and found support buyers. Why? Because risk can be defined and risk can be limited. All you have to do is put your stop down here. If the price moved down below this 50% level with momentum, you would get out. If you bought against this level, you were rewarded with a decent move to the upside. Took the price up to 1.1088 area. What is that near? That's near the 100-hour moving average. In trading yesterday, the price rise came up to and through that 100-hour moving average, but stayed below the close 200-hour moving average and started to lose its momentum. Bailey comment sent the price further to downside, giving those traders who leaned against this area right here the reward that they so truly deserved. Maybe got lucky, but that's traders' luck. And they were able to exit near the 50% retracement target. So good for them. The 100-hour moving average is now risk. If the price is going to go higher, we need to get and stay above the 100-hour moving average. Anything less than that, and the sellers are still in control, we'll keep this level right here, 110.19 level, as a level to eye. Why? Because it was a swing low here, swing low here, swing low here, swing low here, swing low here. Went below it here and failed, and then reestablished support there, and then swing high here. Went above it here, went to 38.2 and failed, and now we're back down. Well, down testing that level. If we get below that level, that would open the door for another retest down to the 50% retracement level. Let's take a look at the dollar versus Swiss as our last currency pair to look at here today in the morning report. We came down to the 100-hour moving average yesterday, found support buyers, moved back to the upside, getting above this level here where we have swing high, swing high, swing high, swing high, swing high, swing low. Came down to it. You can see the level right there. So we moved up into that area here in the last few minutes of trading. Also reestablished support against the 100-hour moving average after failing again on the dip below it here. So we're really in a tight range in the dollar versus Swiss, waiting for the rotation either to the downside, getting and staying below the 100-hour moving average, or moving above the 0.99647 and seeing some momentum to the upside in that currency pair. So there you have it. Look at 4 of the major currency pairs to start off your trading day. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.